Welcome to Tradiers, the Trader's Edge. I'm Jim Murio. The caffeine is kicking in. That's Bob Iacchino. Bobby, yesterday we saw that CPI print that came in higher than expected. Still in a disinflationary period. Do you think, you've been saying for quite a while that you think there's going to be a resurgence of inflation? I've been saying quite a while that I thought it was going to be very, very mild. Are you claiming victory already or no?
No, not at all. Not at all. I think I'm on the side of Chicago Fed President Austin Goolsbee, which is a rare statement for me to make, by the way. Austin's a good guy, but he's wrong most of the time, in my opinion.
Right.
But he said that he thinks basically that if productivity were to keep increasing, that CPI reaction we had yesterday would turn out to be a bit of an overreaction, which I agree with. But the one thing I will say is that some of the other factors, again, that we're seeing underneath everything, if the entire year finished like January finished, we'd have a 4.1 headline and about a 5.1 core if everything went. So it definitely needs to continue to deflate.
So, I mean, why the hell we're going to bring on a guest in 2 seconds, but just a short answer, why the hell aren't higher rates working?
I think, you've actually pointed it out many, many times that really the only thing that the higher rates are affecting is the housing market. And because rates were so low for so long, it's not even having a great effect on that because there's no inventory, which is keeping prices high.
Yeah.
So the only place it really had an effect so far is automobiles, cars, used cars mainly.
Yeah.
So it's just not the effective tool that it was unless we stay here for a long, long time, which I think we both agree is not going to happen at this point because we have an election coming.
I agree. You need to goose things for an election. But anyway, one thing I say all the time, you may think Bobby and I are a couple dumbasses, but we do get good guests and we're not going to disappoint this time as well. We have Shana Orczyk Sissel, who is the CEO and founder of Bonrian Capital, and she is the queen of the alternatives. Let's bring her on. Shana.
Hey, happy Valentine's Day, boys.
Is that why you're wearing red for Valentine's Day?
I am. I love this holiday.
That's awesome. My wife bought me a pair of shoes and a bag of chocolates, but she told me not to get her anything, and I believed her. Is it a trap?
It is a trap. I was at Walgreens last night in Wilmette, and it's a smaller Walgreens, and it has like maybe 50 parking spots, and then like every single spot was full. And when I walked in the store, there was 10 men deep, all buying cards and candy. Every single person in that Walgreens was a man who forgot today was Valentine's Day.
I forgot until yesterday, and she knew I forgot. And I do think there's a chance it's a trap, but I still say 70% it's not, because I've run into her a bunch today and she seems fine. Bobby?
You should still do something.
So if you guys ever want to hear the perfect description of men's brains on Valentine's Day, there's a song by Steve Earle. It's just an acoustic song. It's like 1 minute and 15 seconds long. And it's called Valentine's Day. He basically says, I come to you with empty hands. I guess I just forgot again. And it goes on like that. I mean, it's fantastic. So instead of buying my wife something, I just wake up and I play that song.
Okay, here comes a trivia quiz question to both you two who are very smart. Here's $1 if you get the right answer. I've been in the restaurant business for 11 years. Turns out I thought the Valentine's Day would be a great day in the restaurant business. It's not a great day in the restaurant business. Can you guys figure out why?
Well, I'm guessing that most people want to have dinner at home or do something at home.
No, because all our tables are full. Bobby, one shot for you.
Every table's twos.
Every table's a two-top.
No,
and we have all these big tables, and every table's a two-top. It's so funny. The first Valentine's Day, I was like, oh, this is going to be great. And one of my old servers was like, no, it's not going to be great at all. Just watch. We have tables meant for 6, 2 people sitting at them. The whole restaurant's full. There's a line out the door, and we're not making much money. I thought that was interesting. Yeah.
See, Valentine's Day was always a big deal in my house. My dad always made sure all his daughters had flowers and chocolates, and he always went over the top for my mom. So I just grew up with Valentine's Day being a big thing where you like just celebrate the idea of love and romance. And my dad is a hopeless romantic. So
it's awesome. And I'm not opposed.
I love the holiday, even when I'm single.
Yeah, but I'm not opposed to Valentine's Day. I would do something if I thought of it and wasn't running around like crazy. I'm for it. And maybe I will. I'll run out because I'm running out some errands. I'm going to the bar. I mean, the bar that I own, not to go drink with my friends, but maybe I'll stop by and grab her something. But anyway, this is supposed to be a show about finance and economics and trading. Do you guys want to do that too, or no?
Yeah, I guess we could talk about that stuff.
We'll hit that for a little, then we'll get back to Valentine's Day after that. Did you hear our conversation about the CPI data that came out yesterday? Where do you stand on that?
So first off, I would like to tell Jim, I love that I can say you've been wrong for a while.
So far,
we were on back in June. Do you remember this conversation where
I was wrong? I don't remember.
Cut rates, and you were like, "Yes, they are." And we were going back and forth, and I made you like logically think through the whole Fed cutting rates thing.
I remember that
session, and you couldn't actually logically make it support that.
Note to self: never have Shana on the show again. Oh no, please continue. Go.
Well, if Bobby wasn't going to call you out, I feel like
you always should call me out. Yeah.
But no, I'm not surprised. In fact, my chief investment strategist and I were on the phone earlier today, laughing about it because we had been getting a lot of flack for a while saying there's zero chance the Fed's cutting 6 times this year. I don't even know if they're going to cut 3. I think people are too ahead of themselves. The economy is doing fine with high rates. It's doing fine. And inflation is getting higher. And it's bumped back up. We have full employment. 3.5%, 4% economic and GDP growth. Earnings are great. Like, why do you need to cut rates?
And that's an interesting point, Shane. And I think part of what made me say that they're not going to cut rates until the pivot came, right? I think you and I agreed because we actually interacted, I think, on X about it. But I remember that as soon as he pivoted, the market priced in first 8 cuts, then 7, then 6, then 5. I think it's 4 now, but certainly we've backed out of the March cut. But I just have a hard time imagining that this particular Fed with a chair who's going to be fired if Biden loses the election isn't going to find some excuse to say we're a little too restrictive and cut a couple of more times. What are your thoughts on that?
GDP comes in over 3%. Inflation continues to tick higher little by little. Employment is where it's at. Please explain to me how you can justify a Fed cut. The whole point is you cut rates when inflation comes down because demand has been sufficiently stifled. That has not happened.
We agree on this.
Explain to me how you can justify a rate cut with 3.5% GDP growth, earnings really good, full employment, and inflation ticking higher.
So I use the same example as a husband or a boyfriend who has 4 calendars in his office and still doesn't remember it's Valentine's Day. It's not that it can be justified. It's just that I think they'll do it anyway. Like, I think they're wrong to do it. I think the way we're set up now, we're still going to have over 2% inflation in the first quarter of 2025. It's my honest thought. And unless we see non-farm payrolls, or rather the unemployment rate, move up, I think they're going to do it because they're political. Now, you think they shouldn't, and I agree with you, but do you think they will?
I don't think they will. I think Powell's been super, super clear that they're going to be data dependent. In the comments he made a couple of weeks ago, he was very clear, like, we're not going to cut. Inflation is not under control. He made comments that don't make me think that they're going to be overly political. I don't know if he wants to work for either potential candidate, to be honest with you. I think he might be gone either way. But I do think he doesn't want his legacy to be like Greenspan-ish, where things get so out of control that it led to like a massive collapse. So and then you can go all the way back and start to blame, the Fed chair from like 10 years prior, because that's the person who like fed the flames.
So to you, Jimmy, then, do you think that his legacy is more important to him than his job currently? I mean, that's actually a great point, and I think I might agree with that.
I do too. Now, I think that if he was really, really early in his tenure, he might be, making deals to keep his job. But at this point in time, I bet his legacy is more important than that. But I have 2 things to ask. One, is there a chance that, now they're starting to talk about commercial real estate and how it could show up in banks? And I do think he's probably concerned about that. And I don't remember what the second thing is, but I was going to say too, is that in the Fed funds market, I just read a really, really interesting piece. Even when it was saying 170 basis points, it is folly to think that that's what the market is predicting, because there's so much hedging restrictions at banks. They have to hedge for certain probabilities that they bump that out. So if the Fed funds market, in my mind, and this is the first time I've said this, I know I've quoted it a million times on different shows. If the Fed funds market back when it's at 170, it's probably really saying about 120. Now it's saying 100. It's probably really saying 60 or 70 basis points if you take out that hedging element. But back to commercial real estate and banks, do you think he could use that as cover for an ease?
Yeah, but I think that he knows he screwed up by not cutting or not raising sooner. And I think he wants to make sure that his legacy is not that. So he's going to probably be more conservative here. And I get your point with commercial real estate, but I feel like we've been talking about the demise of commercial real estate for a while now.
Yeah.
And I feel like we've found ways to basically avoid a complete disaster there. I don't know if we'll continue to be able to do it. I mean, we're able to do a lot of things for a long time, and then it eventually like crashes and burns. But I feel like we've been talking about commercial real estate and office space bust for years now. And I mean, it's not great, but it's certainly not as bad as we expected it to be.
Bobby?
I have a sort of an odd question. So you're the queen of alternatives. Your company is a company that you founded, is focused on portfolios of ETFs. Tell me if I say anything incorrectly, please correct.
That's not entirely correct.
Okay, correct me, please.
So we built the technology platform to help advisors scale alternative investment allocations, both public and private. And part of our offering is ETF models of liquid alternative ETFs.
Okay, so you also look at private equity markets and things like that.
Private equity, real estate, VC, private debt, you name it.
Okay, so my question was actually going to private equity, so I'm glad you corrected me on that. You, from a private equity standpoint, I saw a study yesterday, and I don't have it in front of me, and I can't even reference it, but it said that basically over the last 10 years or so, private equity stocks have outperformed private equity. Have you ever noticed any sort of phenomenon like that? Like, have you ever looked at the stocks and say, yeah, the private equity is great, but the stock of the company is actually doing much better because the business can be so good?
I've never really invested in private equity stocks, but if you want to go down this rabbit hole, I highly recommend you start reading Cliff Asness's tweets because he is all over this.
Hold on. What's his name?
I follow him.
You don't know who Cliff Asness is?
I don't. It sounds like Cliff Assman.
He's the founder of AQR. He's like a billionaire.
Yeah, Cliff Assman.
No,
Asness. He's a quant.
Yeah, and he's a good one too.
Also, one of my favorite people in the entire world. Okay. Because even though he's all of the things I just said, he's so down to earth and easy to talk to, and like gives no fucks. Sorry.
So he's gonna laugh. No, you can do that here. So he's gonna laugh at me mispronouncing his name, or no?
He probably will.
Because I'm probably going to watch his tweets and ask me to introduce him so we can get him on one of the shows. But
you should totally have him. He's amazing, and you guys would love him. He's got personality for days. Super fun to talk to. Doesn't take himself too seriously, but he is all over what you're talking about. He has written white papers about this phenomenon. This whole idea of private equity being able to price to look less volatile. I think he had a tweet the other, or whatever they're calling them now, X posts, whatever.
Posts.
He did something the other day. Tony Robbins just came out with a brand new book, and it has to do with private equity investing. And he was talking about that. And yeah, he's all over this. Private equity hasn't been great, but it's because in order for private equity to really be successful, there's two things you have to have. You have to have the right interest rate environment, which we have, right? Low costs of leverage.
By the way, you said which we had, not which we have, right?
I did.
Okay, I just want to make sure. Yeah, okay, good. Yeah.
And you have to have a good IPO market, which we didn't have for a really long time. We had a little window where it was decent and then not again. So you have to have a way to invest cheap so that you can use leverage to, multiply your investment. You have to have a lot of companies that are going private or want to go private or are spinning off things. And we did see that, the number of the market cap and the number of companies that are public, that all came down and it's been shrinking. But in order for private equity to really make money, you have to have like a really robust IPO market. And we had the SPAC craze that like took that away from private equity. And then more companies are staying private longer, which can be good. But how long do private equity investors want to stay locked? And you got to consider that.
So is the whole, did we just pull back the curtain on private equity? Like when rates were 0 for 10 years, all you have to do is be right by this much because you can leverage the shit out of it and make money. That's all gone. Is private equity gone now?
I don't know that it's gone. There's always going to be opportunity there in those types of markets because less information, more ability to actually have impact, right? Because the private equity is a little different than other places. In private equity in particular, having scale and size is an advantage. So like Carlyle, Bain, Blackstone, those companies have so much capital and so much capability that they can really get the best deals and have them and drive the most change in those companies. So I don't think it's dead. I think there's always going to be opportunities to take a company private, fix it, create efficiencies, sell off pieces, whatever, and then bring it back out for an exit to be able to monetize your investment. I just think it got saturated. There's so many players in that space now that the rule that scale was a benefit, I don't know if that will hold true in the future. And the same way I think that's true with a lot of VC, because I think now the opportunities are going to be in the places people aren't willing or haven't been looking, or in smaller deals, which these big companies with like billions and billions of dollars that they need to invest aren't going to look at.
What's the difference between VC and private equity?
Well, you want me to go down this rabbit hole?
Technically, no, I actually don't. If it's something that can be,
well, I'll try to simplify it. Private equity is a broad category. So when you're referring to private equity, the way you are right now, you're actually referring to what's called buyout, which is a subset of private equity. Venture capital is a subset of private equity. So private equity means literally equity that's private. So that's VC, that's buyout, that's mezzanine, that's all that stuff. Yeah. But when we collect, you know what? I'm going to try to say a word to sound smart, and I'm not going to say it right. So I'm just going to say when we, casually refer to private equity, and when you hear that in the marketplace, they're almost always referring to buyout.
Yeah.
But private equity is actually a super broad category of anything that is literally private and equity.
That makes sense to me. Bobby?
I'm working on a thesis here. It's not really a thesis, just me sitting around thinking about something. Small cap equities, okay, is something that I don't trade individually, in my opinion, enough. Trade futures all the time, right? Trade commodities, trade FX through the futures, trade individual stocks, buy ETFs on occasion. But small caps are difficult because there's so many of them.
Not just that there's so many, but there's a lot of crap.
There's a lot of crap, right? And recently I saw a statistic that said somewhere in the range of 85% of companies under $5 go to 0 rather than 10, right? So when I'm looking at small cap, I'm trying to figure out a way to get involved, because obviously, it would be very small portions of what I do, but still you want those outsized returns on those small portions of your investable capital in theory. So I was looking at a presentation by the gentleman who is one of the principals at the CAF ETF. Have you ever looked at that? CALF?
Oh, that's one of the ag ones, right?
Yeah. He goes off of enterprise value, cash flow yield is what he goes off of. So I decided to sort of look at the breakdown of their holdings and then go through each individual stock and see if there was anything in there from a structural standpoint that I like. Is that a crazy way to approach things, or should I just go into the ETF and just look at the ETF's returns?
So if I were going to be looking at small caps in the way that you're suggesting, I'll tell you the manager whose portfolio I would look at.
Please.
Joel Tillinghast. It's ridiculously big because he keeps a lot of like little pieces of things that he wants to watch.
Yeah.
But Joel is a masterful small cap investor.
Okay.
And looking at the things he has super tiny positions in can give you a lot of idea of what is piquing his interest because that's how he follows them. You'll look at the portfolio, it has a ridiculous amount of positions, but like 70% of it is like so small. But Joel, the way he kind of thinks and the way he follows stocks is if he doesn't own any of it, he won't follow it. So he will buy like 4 shares of something he likes and put it in the portfolio. So look at the smaller allocations he has. Those are what his watch list is. But there is no better small cap investor, in my opinion, truly, than Joel Tillinghast.
Okay, so I'm not crazy for trying to break down certain ETFs and find things in there that I otherwise wouldn't be able to find.
That's how I get my best ideas. I covered managers for so long. For like most of my career, I did manager research. And there are just managers that I think are brilliant. And I will just go look at what they own and then call them and be like, why do you own this?
That is so, I've wanted to talk to you about this in person for a while because I've been working on it. And I'm like, I just don't know if I'm thinking correctly here because it's not something I've done. You asked me about crude oil. I'll talk to you for an hour and a half. But I think a lot of investors, especially guys who are active in the equity markets, like some of our audience here, is going to look at these things and so, yeah, I'd like to find some of these stocks in the early stages, but I have no idea how to look for them.
And his name was Jim Tillinghast, did you say?
Joel Tillinghast. He runs the Fidelity Low Price Stock Fund.
Oh, okay. I did think I'd recognize that name, Joel Tillinghast.
Yeah, I used to cover him when I worked at Fidelity. He's an interesting character. He's also a super nice guy. Yeah, every time I run into him, he still remembers who I am, which I think is crazy. But he's a really nice guy, and he's literally one of the most brilliant people. And he went to school at Northwestern.
Oh, did you really? Nice. He's one of us. Chicago.
Yeah.
So you look out the landscape now, because basically what you two have talked about is you think and you believe in higher for longer. That's evident, right? Okay. So now you look at, you guys mentioned small caps. I mean, we thought, what's the ETF, IWM or the Russell 2000?
Yep. If you want to do small caps in an ETF, this is just my tip. Use the S&P 600.
Okay.
Because it's higher quality.
Okay, that makes sense. Now, if we're saying higher for longer, isn't that the punch in the face to small caps? Don't they have a lot of debt load? Do they need lower rates to outperform the NASDAQ or no?
I don't know. They've been underperforming for a while, even with lower rates. So
yeah, that's one of the things. Like for me, it's like when I run my normal screens, which is why I had this question in the first place, Jimmy, run my normal screens and, my screens give me high quality large caps. And the minute you put in that the company had to be profitable for the last 5 years, all of a sudden there's like 2.
Nothing, right?
And they're gone. And
I'm going to tell you guys something interesting. When I worked at Fidelity, I covered small cap and mid cap value. And a project I was given by one of the PMs there, John Stone, was he wanted to know what would happen to small and mid cap stocks if rates went up, because we didn't really have that environment. And the Russell indices didn't exist the last time rates were high.
Yeah.
So we had to get quants to like replicate the Russell indices to get history. And here's a fun fact. Interestingly enough, small caps did just fine in high rate environments in the back test we did. In fact, they did better than fine. It's really about stability of the economy that really pushes small caps to do well or not, and not necessarily the rate environment. Yeah, they have some reliance on debt, and you do have to worry about that, obviously. But today, it's easier, and there's more creative ways to get capital. Ask me how I know this.
How do you know?
That's what you do.
Well, we've been raising capital, so it's been a tough VC environment, so we've had to get creative. But my point is, small caps are really dependent on the economy and the consumer and demand more than like those economic conditions that you're speaking of. So as long as if rates are high because the economy is booming, that should be a tailwind to small caps. Now, small caps have done absolutely nothing like normal. They've been performing poorly. They haven't done well. Like the Mag 7 has just kicked everybody's ass. But in theory, if you think about it, and when you look back at the periods of time where rates were high, where we were able to like look at the stocks that were public at the time and find what Russell defines as small cap and recreate those indices, we actually found that they actually continue to outperform. And there's like a weird Ibsen growth of $100 chart that puts all the market cap indices on top of each other. And over time, small cap beats mid cap, beats large cap in that order.
Right.
So when you did your study and you had the algos do the look back, was there any survivorship bias?
No.
No. So you looked at companies that had gone out of business.
Yeah, they had to. Here's the thing is that a lot of the time, the companies that go out of business, they fall. You know, they call it the rising stars, falling knives. That happens through the mid cap indice. So things rise through the mid cap indice and then start to fall through the mid cap indice, which is why the mid caps actually are like the place that's like the sweet spot of the market because they're good risk return, lower risk than the small caps, much better returns than the large caps. But it's the falling knives, rising stars kind of phenomenon. You can't do the look back without that. But a lot of times the stuff that falls out of the higher market caps and goes all the way down. So it's like falling through, not necessarily like in small cap the whole time.
Can one of you guys explain survivorship bias for the people who don't know what that is, including me?
Okay, so it's the idea that when you're creating these indices and you're doing these back tests, that you don't include things that don't exist through the entire period of the back test. So if something, when you started the period, it existed, but then it went out of business at some point. So at the end of the period, it doesn't. Survivorship bias would mean that you just didn't include it because you didn't have the whole time period to include.
Okay. You know, one of the things I always think about survivorship bias, you know, that the picture of the World War II plane, and this is my favorite of government things, the planes kept coming back and they diagrammed where the bullets were, where the plane took the bullets. So in the genius of the American government and the American military, they're like, this is where our planes are getting shot. We need to fortify these areas. Then they realized several years later that the reason those planes, the planes that were shot in the other spots never came back. Right. So, like, I mean, it's just kind of a weird psychological thing that leads you one way. But I think it's maybe not a great example for survivorship bias, but it's just about how your mind can lead to one thing. But anyway,
well, survivorship bias can work both ways, right? Yeah. So sometimes that means you take out something that didn't exist in the beginning but did at the end that did really well. So like, there's different ways, but survivorship bias almost always makes things look better than they really were.
Okay, so now we're looking at the economic condition. You've complimented our economy before. You said things are going well, demand's good. I will argue that when you have that $34.2 trillion national debt and growing daily and compounding, it's hard to really make that assertion that we're doing great. Do you think there's stability? And if that's the case, what's going to do well over the next 2 years in a stable, growing economy?
So I want to just make sure I am clear. The economy is doing well based on the economic data. I didn't say I thought the economy was great. I think if you talk to like the average person on the street, they would. As a matter of fact, I think there was a survey that was recently done that asked like millennials and Gen Z if they felt like the economy was good, and like 70% were like the economy sucks.
Yeah.
So like I'm like objectively looking at economic data, which says the economy is doing good. Right. And if inflation's rising, that there's a reason, right? Yeah. There's only two things that make inflation go up: not enough supply and too much demand. And those things different things can drive different parts. But at this point, I'm really confident saying that there's still too much demand.
Right. And is that a function of just so much money was injected into the system? Not all of it's been withdrawn. There's still a lot of money sloshing around, right?
I think some of it, but I also think people spend money when they have job security. And this has been like a ridiculously good and stable job market for a while now.
That's a good takeaway, because I always look for every conversation we have, what a really interesting takeaway is. And I think that's one of them. The fact that there was a labor shortage has now we've come forward and nobody wants to shed labor. So people have jobs. We have relatively low unemployment. And that's why maybe this YOLO spending is like, fuck it, let's spend money. And I think that that's a good part of it. But anyway, the second part of the question was, what looks good then over the next 2 years?
So, I still like some of the tech names. Like I've been a NVIDIA bull forever. Last time I was on with Bobby, I did 10 minutes on NVIDIA.
Yeah.
I still love NVIDIA. And at that time it was at like $400. It's like $700 now. And that was like in September. I was watching something the other day and they said, if somebody had said there would be a stock in the S&P 500 that was up 45% through today, year to date, would you have guessed that was NVIDIA?
Nope.
No.
Yeah. But I like NVIDIA. And interestingly, I saw the CEO of ARM on CNBC the other day, and I thought he made some interesting comments, which is that their business is very much aligned with NVIDIA. And if NVIDIA does well, they do well, and vice versa. ARM's another name I'd probably take a look at. I think there's some, like, you can't ignore, last time I was on, Bobby and I talked about this, the patents and like what the next trends are, and you can't get, you got to get out of the way of that, because you can say till you're blue in the face all the reasons you think it won't continue, but like at the end of the day, we're only like inning 2 of this AI like evolution that we have going on. Even I'm starting to see ways that I can incorporate AI in like our business with like advisor workflows, which is pretty cool. So like, I think you gotta look at that longer term trend and who benefits from that. So those stocks I like. I do also like healthcare. I had surgery at the end of last year. I had a back surgery. And so while I spent 2 weeks in the hospital, I spent a lot of time talking to doctors and nurses and learning about different medications and, all the different pharmaceuticals. And I have a friend in biotech that I would ask her questions because I was bored and I'm in a hospital, and why not? And the speed of development of drugs right now is crazy. I don't think the average person understands how much advancements are going on in a lot of pharmaceutical and drug development right now. Like, it's crazy. You have Ozempic, but like Eli also has like other groundbreaking drugs in the oncology space. I've been looking at Vertex Pharmaceuticals, which is like absolutely killing it in cystic fibrosis. Novartis has these crazy, like groundbreaking, game-changing oncology drugs that are keeping people alive. I had one doctor tell me that in most cases today, cancer is a chronic illness. It's no longer a terminal diagnosis, which is crazy. Absolutely. And doctors will tell you that their only goal when they're treating patients who are dealing with some form of cancer is to keep them alive 5 more years, because in 5 years, the drug that will keep them alive another 5 years will be ready. It's insane.
And I know you mentioned a couple names in that space that you like. Can you mention them again real quick?
Novartis and Vertex Pharmaceuticals are my 2 favorite, but I would be remiss to ignore that Eli owns Ozempic, and that is a groundbreaking drug. But they also have a drug called Vibrance, which is a CDK4/6 inhibitor, which is like game-changing breast cancer drug, which is a huge win for them too. So they have a couple of really amazing, groundbreaking drugs.
So healthcare is pretty much recession-proof, right? I mean, not that we're heading into a recession. I don't.
Certain parts of healthcare are recession-proof. I would argue that like biotech isn't.
Yeah, well, that's actually where I was going to go with it. So when you're talking about healthcare, you're talking about pharma, you're talking about insurance, you're talking about biotech, or specifically pharma. Is it healthcare in general?
I personally like the exciting stuff. I mean, the stocks I just gave you are like biotech pharma companies.
Yeah.
The recession-proof stuff is the boring stuff, like the the HMOs and
your Cardinal
Health and like the knee replacement stuff. And I have metal in my back now. I should probably find out who made it and maybe invest in them. But yeah, that's the stuff that's recession-proof. The like biotech, the really exciting stuff is not, because it all depends on the ability to get money to use for research, and that is largely dependent on grants and donations and all kinds of other things, which are very, very dependent on economic conditions. But I think those are spaces that are really interesting today, because if the thesis is true, whereas I heard while I was in the hospital that we're making such massive strides against illnesses that were typically, sorry, it's been nice. Then that means people are going to live longer, which means there's going to be more demand for drugs, which, by the way, are super expensive because of how much money goes into the research and development part. And it's interesting. I can't remember, Jim, if it was you or Bobby that talked about this, but I feel like one of you posted something on X about how people don't understand the reason why drug prices are so high in the US is because they can't charge what they need to charge to make up for research and development in other countries. So they have to make it up somewhere. And if they can't do it here, then they just can't develop these drugs.
Right.
And I think that's really interesting because it is very expensive to do this. But I think the opportunity is huge if people are going to be living longer and they're going to be using these very expensive drugs.
It's interesting. First of all, I think that was Jimmy that posted that because I remember.
That sounds above my pay grade. That doesn't sound smart. That sounds too smart.
All right. I'll take the credit. But
you take the credit.
Yeah. But do you think, okay, so I never think of biotech pharma.
You know what? It was Cliff Asness that posted it.
Oh, shit. That guy's he's a thorn in our ass all the time. He's so much smarter than us.
He really is. Pretty much everyone is. From a perspective of like the political season coming up. And, I don't know if you care to get political or not, but do you think there's any sort of a blowback that could happen with biotech pharma, considering the sort of lack of trust on the right and who is likely to be the presidential nominee from that side? If he were to win, could there be blowback? I mean, if they go after Fauci or if they go after anybody else, you could theoretically see a lot bigger restrictions on the research, or am I nuts?
I think there's something to that. But I actually think in the US, we're really bad. Our FDA is awful at approval. They prove some things too fast and then other things like not fast enough. I think Europe does a much better job approving drugs and doing the work. I think there's something to that. But I think at the end of the day, people will do anything to try to live as long as possible. And that will always be the overriding factor of like the human interest in staying alive will always override the political function. But I do think, there's potential for that. But if you think about where the public distrust is in pharma, I think it's more in the stuff that they try to shove down everybody's throat and not the game-changing, life-saving stuff.
Right. Yeah, treatment. I think there's more trust in treatment because people are already that sick.
Exactly. I think
the vaccine
stuff that could potentially keep you alive or, treating something that is going to keep you alive, people will take any chance because it's the difference between living and dying, right? But it's like vaccines, anything related to stuff that's not going to kill you that people don't trust.
It's funny you say that. I know someone who had a stroke who wouldn't even go to the doctor, completely anti-medical establishment, anti-insurance company, had a stroke, 6 pills a day without fail now because he came back from that stroke. So it's an interesting anecdote.
No, I truly think people will never push back on stuff that's like that could potentially save them lives. If you think about it, like people who are in like late stage terminal cancer, they'll try anything.
Yeah.
At that point, like literally anything. I actually, okay, you guys are gonna laugh at me, but when I had my back issues, one of my investors sent me to a healer.
I think it's worth it. What is a healer, by the way?
Like literally,
someone who heals you.
Yeah, exactly like that, Jim. Exactly. Wow. And his name is Seldar.
What is his name?
Seldar, which is exactly what you would expect the healer's name to be.
Yeah, Seldar, of course.
But Seldar has actually cured terminal people who were like days from dying. Because you can laugh all you want at the idea of a healer until you're about to die. And then like, I'll give it a shot. What the hell? And I think there's something to that when it comes to biotech and research and where people are willing to spend money, allocate funds versus, other things.
So that's funny because, and then I think about the healer and I'm perfectly fine with it. I'm not laughing at you at all. And I sometimes think, is a healer is he so strong mentally that he can make you believe that you're going to heal? And then is your mind powerful enough to heal yourself? What do you think?
I actually think there's something to that.
Yeah.
I really do think there's something to that. In the case of the people I know personally he's healed, one of them was a 15-year-old girl with a brain tumor who was literally being taken off life support when he started working with her. And now she can like walk and talk. Wow. And like her tumor has shrunk 80%. She's 15. I'm guessing that it's probably not the same. Like she wasn't even like conscious. Mm-hmm. But I do think that the mind body thing is way more powerful than people think. So way more powerful than people think.
Which is so funny because I argued from the beginning of whatever this thing was over the last 4 years, at the beginning of it, particularly old people, the news is scaring the shit out of people about this virus that they're going to that everybody is going to contract, and then telling them, oh God, man, you could die from this. How destructive that was. I think there's real people who died because they were being told they were going to die. People who were weak to begin with. That's not crazy, is it?
But think about the people who were the most scared. It wasn't the old people.
Yeah. Who was it?
Right.
It was the younger people. There was always the old people that were like, I don't care. Come see me. I want to see people. I want to go out. I don't know how much longer I'm going to be here. It was the young people that were freaked out.
It was crazy too. Like the young people who had very, very little risk. And my daughter and her friends were crazy. I like the whole time, like I didn't give a shit. I had, you came out to my bar.
I did because I didn't want to wear a mask.
Right.
And I didn't want to have to show a vaccine card. Well, not because of me, but because I wanted to have lunch with my son and we didn't want to get him vaccinated.
I remember people come like, are you asking for vaccine cards? The hell if I'm ever going to do that. When the cops came in and said, you're going to have to scatter this crowd, you're going to have to do this. I remember saying, oh, this is excellent. Because if you're going to give me a badge, a gun, and a pension, I'll do your job for you. And he's like, well, no, I mean, you're supposed to. I'm like, no, that's bullshit. I'm not going to go around asking people for anything. And we did not start out trying to be some rogue rule breakers. We were like, okay, what are we going to do? And then we're like, I don't know what we're going to do. And then our patrons pretty much set the table for us. They'd order carry out and then they'd go sit in the restaurant and just look at me with a wink, knowing full well that I was glad they're there. You know what I mean? I said we were closed, but then all of a sudden we were open. So
there were plenty of people. Like you could tell the actual public sentiment by going to like your restaurant and seeing how packed it was.
Yeah, it was packed all the time. Bobby, you should have seen it. It was crazy. We were supposed to close. The Cook County came in on a Friday night. My partner was there, and he rarely drinks too much there. But legend has it, I had just left. But several people told me the story where the Cook County guy came in and said, yo, you're going to have to get rid of this crowd. And he said, you're going to have to go fuck yourself. And we made it on the Cook County website the next day, which I still think, I can't imagine that we're going to get away scot-free for. So, those people are vengeful. And I'm just hoping to God that it doesn't sometimes come around and bite us in the ass. Where were we talking about?
The point is, I think that the mind-body connection is so much more powerful than we even understand.
I 100% agree.
Yeah, I agree. My mind thinks my body's incredible, and I seem to be the only one who thinks that. From a perspective of assets, just in general, okay, I think we're reflating. This is what we're talking about, right? Reflation of assets, reflation of prices. And if you do a back test on sectors, energy outperforms.
Yes.
Not by a lot. I mean, technology's still up there, but energy outperforms. Number one, how do you feel about energy right now? And number two, is there an ETF you like? Everybody always looks at XLE. Is there something else you like that's better?
I agree that energy is a great place to be if you think we're in a reflationary environment. It's also tends to be good if you're like inflation is rising. And, I think that could be really interesting. I don't know that I have necessarily an ETF. I really like FANG. That's an individual security. Yeah. But like, XLE is perfectly fine. There are some like more specialized ones that if you wanted to go there, you could like, we talked about corn. That's ag, not necessarily energy, but I mean, it really depends on what you're looking to achieve. I think XLE is perfectly fine.
Yeah, Diamondback tends to outperform the XLE. I mean, and it's
Well,
highly
it's because
correlated
it
to it,
has a
obviously.
lower cost. Like the cost of oil can go lower and they can still make money. It's one of the few places where their like margins are good at like $40 a barrel.
Right, right.
So, a lot of the big integrateds pay a dividend. You guys remember what that word means, dividend? Do we even talk about that when rates are 5%?
I think it's funny because I don't think dividend stocks have actually outperformed at all.
No. Yeah, me neither, which is
for a while.
Yeah.
Not like recently, but like for a long time. I think First Trust did some good work on that.
We love the First Trust guys. They're on our team, and we'd love for them to eventually sponsor us. So if you're listening, Brian Westbury, Bob Steiner, what's the CEO's name? Do you know, Bobby, or no?
I don't. I just know Brian and Bob.
Yeah, no, those guys are great. Yeah,
they really should.
Yeah.
So from a perspective of what we were talking about a little while ago with that sort of medical trust issue, right?
Mm-hmm.
It was interesting because it's part of what made me move down to Florida. As a matter of fact, it's almost solely what made me move down to Florida was what was going on with that whole thing. And then I sit here and I look and I see Florida from a completely different perspective than I used to, right?
Mm-hmm.
I mean, obviously, I tan under a flashlight, so I tend to keep my vitamin D going. I walked outside.
Give me some of that because I am pale.
I know. Do certain equities perform when certain states perform? Have you ever seen that? I mean,
I mean, if Texas is doing well, energy does well.
Yeah,
I mean, that's the most obvious one. Texas fine whether California does or not. Texas is really the one state I can point to and be like, that one state does drive a specific sector. But I'm not convinced there's many others.
So you don't necessarily have any interest in municipal bonds based on that kind of a thesis, right? I mean, do you ever look at municipal bonds at all?
Well, you just asked two different questions, though.
Of course I did.
Because like you asked if certain sectors would outperform if a state does well.
Yeah.
And then you brought up muni bonds. And those two things are not one and the same.
Mm-hmm. No, I know, but I see them as correlated in a way because I would want to be in, like, I don't want to buy Illinois bonds.
Well, yeah, I mean,
I don't want to be anywhere near Illinois bonds. I want to be near New Jersey's bonds. But then if something like we get worse and worse energy policy, do you see something like a Texas muni being downgraded?
No.
Okay. So I have one good thesis today.
Because if there's anything we've learned through this whole thing, it's that you can try however you want to suppress demand for oil. Mm-hmm. And the more you do it, bad things happen. And people notice.
This has been a theme on our show.
I get in these massive arguments with people on X about EVs. I just bought a new car. Mm-hmm. Full disclosure. I'm very excited about it too. When you were talking about used cars, I found like the sweet spot if you want to buy a car. It is the former loaner market. Mm-hmm. Apparently, every major manufacturer has loaner cars at the dealerships, right? You know, you go. They are only allowed to have so many turns on a loaner, and then they have to sell them. But it's not new anymore, but it is new because it's the current model year, but it has miles. So they incentivize people to buy the loaners by like discounting the price from a normal sticker by like 20% and then giving you extra 1 to 2 years extra warranty with no mileage cap. And you're buying basically a brand new car that has 2,000 miles on it with 2 extra years of warranty, no cap on the miles for that warranty at a 20% discount. That's a sweet spot in the market.
What'd you buy?
I bought a Range Rover.
Good for you. It's badass. Yes.
But somebody said, like, why didn't you buy an EV? Like, hybrid was the way I wanted to go. My parents have been driving hybrids for a long time. Mm-hmm. I think they're better. And then I get in these arguments with people like, okay, say we all changed EV tomorrow. Our grid cannot handle a hot day with AC. You want everybody to plug a car in?
And what about this winter?
Every single person?
Yeah. What about the
every
winter?
Every day, not just the summertime where we can like plan for that. We got to rebuild the grid, people. Yeah. We like until I see any like real movement there, I just am not comfortable buying pure electric vehicle. Hybrid, awesome. And every major manufacturer makes hybrid models. Everyone. Range Rover has some. They have a Velar and an Evoque, and I think at least one other that's hybrid. BMW has. They all have hybrid versions. You can have Porsche Cayenne hybrid.
Yeah,
they exist.
They certainly don't push them, right? I mean, you don't hear much about hybrids except from Toyota.
Because I feel like it's the
basically
best
Toyota pushes it, right?
But I swear to God, I have a point here.
Yeah, please.
The point I'm trying to make is what you were just saying about oil policy and how that might affect Texas. At the end of the day, we don't have the infrastructure to go away from oil in a meaningful way. And most of the electric grid runs on what?
Coal
or gasoline, or it's not on environmentally friendly. It's on a fossil fuel. So can we, let's be realistic. It's, until we are willing to make the investment into completely upgrading the grid and completely upgrading what powers the grid, I just don't know that you could ever use policy to suppress that market. And you can try, but it would be short term. And then eventually you'll end up with exactly what happened, which is gasoline prices went up and up and up, right? And then it was you had to do something, and now I can get gas for $3 again.
So Rivian is depressed. Lucid is depressed. Tesla is not as good as it once was. Rest in peace, Toby Keith.
Don't say anything negative about Tesla on X ever. And it's not because
people go nuts.
If you say anything negative about Tesla, people will come at you like the crypto crowd when a couple of years ago. The cult.
My question is, the only one I really see going all in on hybrid, and you're right, they all have them. I have an American-made car with a ridiculously loud, large engine, and I get 4 miles of the gallon, and I leave patches of my tires everywhere I go because I'm Italian, and that's what we do.
That's not what all of us do, but anyway.
You wanted to when you were younger.
I wanted to when I was younger.
I just reject my age. And then we also have a Toyota hybrid, right? And that hybrid runs forever. There's never anything wrong with it. We're getting 50 miles a gallon. And, we've had Doomberg on the podcast a couple of times, and Doomberg has gone over and over how the hybrids make so much more sense, even if you care about climate change. So from a stock perspective.
Yes. And the best part about hybrids is that there are plug-in hybrids, but my parents both of them have hybrids. My mom has this really amazing Hyundai SUV that's a hybrid.
Yeah.
And they don't plug in. They the electric part comes from the movement of the axles.
Wow.
Right.
So you don't
right.
That's cool.
I just don't understand. Hybrids just seem like the right move, and nobody wants to recognize that.
Because
the Toyota we have charges the battery from driving and braking. Even braking charges the battery for some. I don't understand it. But who's doing? Let's not bring Tesla, Lucid, and Rivian, terrible stocks right now. Who's doing it right on the automotive side then? Because the only one I see pushing hybrids is Hyundai and Toyota.
Yeah,
you can't get them in the U.S., right? I mean, what's a hybrid, Jimmy? Ford, Chevy?
You can get every single manufacturer has hybrid. Range Rover has a hybrid, I got a hybrid. But you can. It's just hard to. Every major manufacturer does make hybrids, but they're usually not on the lot, and you have to order them, which stinks. But the X5, BMW X5 has a hybrid version. Range Rover Evoque, Range Rover Velar have hybrid versions. Lexus makes some great RX 450 hybrids.
That's Toyota.
And the NX has a great hybrid as well. I'm trying to think of Porsche has the Cayenne and the hybrid, and the Macan hybrid. You can get hybrids of pretty much anything. They just don't advertise it, and they're not always on the lots.
Well, why don't they advertise it?
I don't know. It's baffling to me.
Because it's got to have something to do with the crazy ravenous.
Can we do conspiracy theory?
Yeah. Well, the leftists want to hear about just EVs. They don't want anything to do with fossil fuels.
And if people realized that hybrids were better, then that would totally blow up that entire and they're doing subsidies and they're trying to encourage EVs. People realized hybrids were better. Oh my God.
Yeah.
What would happen?
My buddies, I had a lot of big EV drivers go to Brant's. They would talk for until we had this cold spell. They'd always talk about how great they were, and now they're very, very quiet. And one guy said, "Yeah, I get about 50 miles to the charge when it's 0 degrees out." So there was a big problem with that.
Yeah,
there was a whole thing, and I remember people like thinking that, oh, it doesn't happen. Like I'd like people to explain to me how you can get people in cold climates into hybrids, because there was a whole thing here in Chicago when we were like negative 30.
Yeah.
And Oakbrook, right by the mall, where there were hundreds of EVs that died because they had no charge and they couldn't move them. Okay. And like all the news crews, it's not like I made this up. You can go Google this. Yeah, it really happened. It was hundreds of them. Can you imagine?
Yeah, it's crazy. I just don't even. Then you spend 80 grand on that car, and that's what you get. I'm not in, and my mind is boggled.
On a side note, this reminds me of something that I think about every time I watch House Hunters, because it always strikes me as odd, but it's kind of, I don't know why this is reminding me of this. Every time I watch House Hunters and people are like, I want a gas fireplace. Dude, if the power goes out, you want a wood burning fireplace. Why would you do that?
Well, I have a hybrid. I have a gas fireplace that you could burn wood in.
Hybrid is the solution to everything.
Fireplace.
It's the solution to everything. It's
I don't know why this conversation reminded me of that, but every time I watch House Hunters and people get mad about wood burning fireplaces, I'm like, people, if you need to survive and there's no electricity and the gas lines aren't working, you really do want a wood burning fireplace. That is actually going to sustain you.
Well, my natural gas line works when the power goes out, doesn't it?
Some do, some don't.
Some do, some don't. Okay. Because I have in my backyard, I have a big gas fire pit. It's fantastic.
Most generators are powered by gas lines. So when the power goes out, they kick on. I had one when I had a house back in Massachusetts. We built it, and I was like, we have to have a generator. And I remember my ex-husband was like, why? And I just remember in 2008, there was an ice storm, and my parents didn't have power for 3 weeks. And ever since then, I was like, I never want to live someplace that doesn't have a generator. Because like they had a generator and they were the only people in the neighborhood that could like live in their house. Yeah. But I digress. But my point is that no, gas doesn't necessarily need power. But if you're going to be like in survival mode, right? You want to do the thing that requires the least amount of like
dependence on the system.
On utility.
Yeah, exactly.
Which also, by the way, if you have an electric car.
Right, exactly. So again, the Thomas Sowell quote, there are no solutions, there are only trade-offs.
No trade-offs.
As we talk about the hybrid, these are the trade-offs. These are the trade-offs that we're looking for. And if people were just reasonable, they'd see these things, but nobody wants to see things from a reasonable lens. And it's really just amazing to me. Bobby, you have anything to close it out? Shana's got to go, I'm sure.
Yeah, I just
talk to you guys all day. I love you guys.
We
don't have me on enough.
Yeah, we love you too. So let's do that then. I had a Lucid. I mean, I think Lucid does it right from a perspective of saying this is a luxury car if you want it. They don't have like green commercial. Like they're saying, look, this is a really cool luxury car if you want to buy it. That's the way they should market it. Having said that, you're really good at picks. Like I've looked at picks that we've talked about, and you're really good at picking stocks. So given that we're going to have you on more often, think about the time frame.
You got to have me and Cameron Dawson on at the same time.
Yeah, we talked about that.
I adore her, and I needed an excuse to like actually have a conversation with her.
Yeah, I'll reach out to her. I'll definitely reach out. We'll do that. So give us 2 picks, though. Give our audience 2 picks you like. Doesn't have to be that you buy it today. Just something you like over a time frame.
Okay.
Well, they have one already with NVIDIA.
Very nice things about me, because some people think I have no brain. But I always look back at my stock picks and go,
yeah. We disagree. Your stock.
I remember 2 years ago, I was on CNBC and the video is up. It's me and Veronica
Corningstone,
Victoria, the blonde. I can't think of her name. And we were on there, and it's like viewers calling in with stock picks. Mm-hmm. And one of them was like Boeing, and we both were like, no. She was short it, and I was like, don't touch it. And like, there's a bunch of comments calling us bimbos. And so I looked at what the stock price was that day, because it's on the screen. And then I looked at what it is today, and it's down.
Who's the bimbo
and
now?
I really wanted to comment like, have you looked at the stock price? It's 2 years later and it's still down from where it was the day we did this spot 2 years ago. Anyways, no, my favorite stocks right now, I do really like Novartis.
Mm-hmm.
I do think they have some really cool stuff. They spun off a division so that they could focus more on their like blockbuster drugs. And so that's one. I could say NVIDIA because that is my favorite stock and has been for like decades. But I'll give you something a little different. I also really like, and I think we talked about this, Leidos.
I don't think we did.
And I have been talking about Leidos for 2 years. And the other day I was watching like Fast Money and 2 people at Fast Money were like, Leidos. I'm like, dude, thank you. Welcome. Welcome to the bandwagon.
One people were calling a bimbo a year ago was saying it. But anyway, when you get into a stock, is it always just fundamental analysis or do you look at the technicals as well?
I never look at technicals because I don't understand them and I'm not afraid to admit it.
No, I've known a lot of
I always went with like, so I grew up basically in my career at Fidelity. Yeah. And there's a couple of fund managers that I like really got to know and really paid attention to. One of them was Will Danoff. And Will always used to say, don't make it more complicated than it sounds. Like sometimes his best ideas come from like going in and grabbing a bagel from a manager or a CEO that he doesn't have any interest in and hearing that guy talk about the competitor and then going and buying the competitor. I don't overthink things. I'm just like, what does this logically seem to make sense? And can I come up with a bear case? And then sometimes I'll look at my favorite PM's portfolios, but most of what I do is just like, this makes sense in my head. And I think it's a good stock and I buy some shares. I actually was at PT yesterday and my therapist was asking me about whether or not I thought NVIDIA and another stock, I can't remember what it was going to split. And I said, I think stocks split a lot less these days because a couple of years ago, you really needed to have your stock split if you wanted people to be able to buy it because you had to buy a full share. But now you can buy fractional shares. It doesn't matter anymore. So she was like, I can't buy NVIDIA because I can't afford it. I said, go to Fidelity, say you want to buy $200 of NVIDIA and buy $200 of NVIDIA. You don't have to pay the full one share stock price. And I think that changes the game in a lot of ways. But I think that like it's more accessible than ever for people to invest. And I do believe that the best way to invest is just to think about logically, like, what do you use? Like Peter Lynch, what do you use? What do you like? And most of the time, if you notice trends and it makes sense, it's probably a decent stock. That's how I've always invested. Like I don't follow hundreds of stocks. I follow like 6 stocks at a time. Stocks I'm following now are FANG, Leidos, Veritex Pharmaceuticals, Novartis, Cisco, NVIDIA. Those are my 6 stocks.
Perfect.
All right. Okay. Tell them where you can tell the people where they can find you.
You can find me everywhere. I'm on X. I'm on Instagram. We have a YouTube channel that I'm super proud of. We're putting out tons of content. I'm going to like promote myself a little bit. We just completed our technology build out and integration with Mammoth Technologies. And it is so amazing. I can't even believe that like this came out of my head because never could have imagined it would be possible. But I'm super excited. We're starting to onboard advisors and we need asset managers because we have like $10 billion that we need to allocate and $750 million of capacity. So if you're an asset manager and you are in the alt space, call me. But yeah, you can find me on our website. I have my own website, LinkedIn, X, and I'm on all the socials.
Well, it's so good to talk to you. I hadn't talked to you in it's been months, and I don't think it should go months so we don't talk again. So this
I filled in for you last time.
I know. You were better than me.
Yes, host.
Yes, yeah. Well, good. Thank you so much. And again, thank you guys for tuning in. As always, it's been a fun show as always. Yeah.